Hello and welcome to Views from the Market, mid-market private equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the private equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome Tom McCullough. Tom is the chairman and CEO of Northwood Family Office. Tom, thank you for joining us and welcome.
It's my pleasure. Glad to be here.
Tom, we always start our podcasts by asking our guests to tell us a little bit about themselves, and in your case, about Northwood. So love to learn a bit more about you and the Northwood Family Office.
Yeah, sure. Happy to tell the story. I've only had two jobs in my life. I worked for Dominion Securities for a lot of years, 20 years, in fact. And then I've been at Northwood for 22 years. I founded it with a partner in 2003. And when I was at Dominion Securities, I had sort of three epiphanies. One is I'd been there for 20 years. I never expected to be anywhere 20 years. And it was a great experience. But I was thinking, wow, it's a long time. The bank got more involved and it was, a little bit of a bigger company and a little less fun. The second thing is I come from a family full of entrepreneurs. I've got 28 first cousins. And of all those cousins, anybody who works is pretty much an entrepreneur. And I was a corporate guy. So I kind of have this in my blood. I wanted to do something entrepreneurial at some point in my life. And I was in my early 40s. And the third epiphany was my family, my parents were looking for what I would now call a family office. This is 25 years ago. And I didn't really know what it was back then. And in fact, people used to ask me when I got into the family office business, what is it? They would say, is it like birth control and family counseling? I said, well, no, not exactly. So I looked around for a family office and couldn't find one. And so, they say the best entrepreneurs are frustrated consumers. That's what I was. So I thought, well, maybe this is the moment to take a leap, leave my 20 years at Dominion Securities and become one of those entrepreneurs in my family and start a family office. And it was slow going at the beginning as people figured out what it was, but it's turned out to be fantastic over 22 years.
And Tom, you were ahead of the time. I mean, family offices, and we're obviously going to talk more about this in terms of the role they play in the market and the activities that we see them do. But, at the time you created Northwood, there weren't many active family offices. I don't know how many, very, very little activity on the family offices side. And so in terms of that sense, where was the opportunity? Where did you see the opportunity for Northwood at that time?
Yeah, I mean, there were very few and there was a big gap, and maybe there still is, in terms of what a real family office is. A lot of people these days are calling themselves family offices, and, I wonder if that's really true. But the opportunity, I thought, was, people, I thought, were looking for somebody who was sitting on their side of the table. There's lots of people to sell you things, tax advice or legal advice even, or investments or insurance. But who's going to sit on your side of the table and help you sort through all of those things in an integrated way? Like if you're going to build a house, you can either do it yourself and coordinate all the trades yourself, even if you've never done it before, or what most people do is they hire a general contractor who's been through it many, many, many times before. So we're more like general contractors. We work horizontally across a client's life. So we know quite a bit about everything, but not as much as each individual professional would about their particular area. So we don't draft wills, we don't do the tax returns, but we're very on top of all those areas and pull it all together and coordinate. The difference between us, though, and a general contractor is they usually leave after the project is done. We stay around forever and make sure the trains run on time.
And family offices have evolved a great deal, obviously, since you created Northwood, and even Northwood itself has evolved. I mean, in terms of activity in the marketplace and what you do. Now we're seeing family offices being active buyers of companies. They're active investors, whether it's minority, majority. Tell us a little bit about Northwood's involvement in terms of investments and also what you're seeing family offices focus on these days when it comes to investing.
Yeah, and I think this is where there's a real divide between single and multifamily offices. A single family office is really an extension of a principal, an individual person or a family, and they can make decisions very quickly and randomly, quite frankly. As if they see a deal that they like, they can make decisions quite quickly. Multifamily offices are a little bit different. So I would say for a single family office, you're talking to make it cost effective, you're talking about $500 million plus in terms of family net worth. Whereas multifamily offices are more of a shared service. So our clients, our minimum family net worth is $30 million. And we have some billionaire clients as well who don't really want to have staff and want the continuity that a multifamily office provides. But oftentimes people are coming to us for that kind of general contractor service where we're pulling together all the various things in their lives. So yes, investments, yes, looking at deals. We don't tend to market deals to clients. Our view is there's lots of other people marketing deals. We act more as a shield than a sword in that role. And we help them think through, does this make sense for you? We'll help them evaluate it, but we're not pitching deals to clients because that puts us on the opposite side of the table from the client. We need to be on their side of the table. But investments are just one piece of what we do. We do estate and tax planning and structuring, working with their existing advisors. We do cash flow planning. We do all the family related stuff, education of the next generation and family dynamics. We do all the administration and keeping track of things. We have bring forward lists. So we're really the point person for the family in all areas of their life. Investments is one piece, and it's probably the piece that most people think of when they think of a family office. But I would say it's really just one of, 8 or 10 services that we offer to families who've got complicated lives. Families of wealth are no better than the next person, but their lives are more complicated. And particularly, our focus is entrepreneurs, and probably 75% of our clients are existing or entrepreneurs who've sold businesses. And these are folks who've been experts at their business, but they may not be expert at the management of liquid wealth. And so especially when they sell the business, they really need somebody to step in many times, unless they love doing it themselves and are experts at it. They need somebody to step in and be the CEO of their liquid wealth, like they were the CEO or hired a CEO for their operating company wealth.
I mean, you highlighted what I think is one of the more interesting things about the growth of the family office space, and particularly multifamily, how it's more than just an investor. It's kind of almost an envelope that kind of surrounds the client in terms of all their needs. One of the things we notice in terms of the growth of private capital is the fact that providers are doing more than just deals, and you hit onto it. And I call it enveloping their clients. Tell us a bit about that phenomenon in terms of what you're seeing. I mean, I would guess in the old days, you were doing that at Dominion Securities, right? When people used to invest more in the public markets. But as we see the growth of investments in the private markets, we're seeing growth of the nature of the people who are helping clients allocate those resources and how they go about it.
Yeah, I don't really think we were doing that at Dominion Securities. We were an investment firm. We added on some other things and we're doing the best we could at the time. But I think what's happened, and I wrote a paper on this topic, it's called The Rise of the Integrated Advisor. And I think what's happened over the last, maybe 10 or 20 years, and we were certainly part of the vanguard of this, is that people have realized that they need an integrated advisor. They need somebody. When they have complex lives, they need somebody to pull all the pieces together. And it shouldn't be that surprising for entrepreneurs because look at their business. They've got, every business has a CEO, and sitting around the table are all the various people that play a role, head of manufacturing and distribution and marketing and legal. And those people meet to plan strategy and to execute the business plan. But often what happens is when you move to liquid wealth, who's the CEO of that liquid wealth? The same guy or gal that, ran a widget business for years. And who sits around the table? Manufacturing and sales? No, they stayed with the business. And what they probably need is somebody who's got skills in other areas, like maybe tax or, investing or trusts. But do those people ever meet? Often they don't. So I think what's happened is people are realizing that they need somebody. In fact, a lot of clients say to us, I need somebody who runs my personal financial affairs with the same degree of professionalism and focus that I ran my operating company. So there's a growing need for people to have somebody who's an integrated advisor. The problem is there's not many people who have that breadth of skills. And so that's why I think there's substantial growth in this field. And in fact, I'm told from a lot of the surveys, there's 13 to 15,000 people in Canada who've got more than 30 million in family net worth. And we are the independent leaders in the multifamily office world, and we've only got 100 families. So there's this massive opportunity of people who have substantial wealth, some of it still in operating companies, but more of it coming loose from operating companies. And they need somebody who's going to play that CEO role of their personal wealth.
One of the interesting parts about the evolution of the family office is how, they used to be more passive investors, but they're becoming very much direct investors. And we're seeing family offices who are acting like private equity firms, branding with a staff. And we're also seeing family offices do alternative stuff. Now, historically, I know we used to associate them a lot with real estate. They used to love real estate, but they're doing venture. We're seeing family offices who focus on venture, focus on growth, who focus on private equity. Where do you think this is all going? And you obviously have the U.S. experience. I mean, they give you one frame of reference, but as you see the evolution of family offices in Canada, you see the growth of them, particularly, as we say, in terms of multiple roles. Where do you see the evolution of the family office space going in Canada?
I think growth is the name of the game. I think people are realizing that they need to be proactive as opposed to reactive. And it really depends on the family, those who are going to be involved in direct or, co-invests and so on. They've got to have staff, or they have to develop some internal expertise, or they have to go to a multifamily office who's got some of that expertise. And then it also depends on size. I find lots of families who want to do direct deals, but they're not really big enough to get diversification. So if they're going to do that, they've got to be of a certain size and have internal expertise to actually do the direct deals. But there's no question that there's more and more family offices actively and proactively involved in the direct investing side. And I think that's just absolutely going to continue.
Tom, when you look at the evolution of the space in terms of where it's going, is there anything you see in the U.S.? Because they're obviously further ahead than we are. I mean, I know in the U.S., we're seeing family offices who are become big private equity firms. They've become managers of billions of dollars who are out in the marketplace. And frankly, even kind of like what you have, a multifamily office that's acting also as like a private equity firm. Any you see that could be coming our way from the perspective of seeing where family offices are going?
The U.S. is about size relative to Canada. We multiply by 10 for almost everything. And I think that's true in the U.S. There's many more family offices in the U.S., probably more than 10 times in Canada. I think all the trends we just talked about are happening faster there than here. An exception to that, though, and I'm involved in a number of U.S.-based organizations, including the Ultra High Net Worth Institute, which is a not-for-profit think tank that really is trying to help wealthy families and those that serve them be on the leading edge of what's happening and how they need to be served. But I think this whole idea of integrated management and not thinking about things as silos, not thinking about one direct deal and one tax structure and the will over here separately. I think they're beginning to realize that all these things are connected. If you make one decision, it has knock-on effects to all these other areas. And just like a CEO of a business has to aggregate and make decisions on all these multiple areas, I think that whole idea of integration and thinking about their approach on an integrated basis. And I don't think Canada is behind in that. In fact, I think we're probably leading the U.S. in that. The U.S. is certainly leading on the size of family offices. And the other thing that's happening in the U.S. is there's a lot of consolidation, especially on the multifamily office side. There's all sorts of firms that are buying up multifamily offices and consolidating for size and for synergies and that kind of thing. I don't think there's much opportunity for that in Canada. There just aren't that many true multifamily offices in Canada. But I think in the U.S., that trend's going to continue for sure. But I think integration is one of the big themes. And I think probably direct investing is another key theme that we've already talked about.
And when you look at the evolution of the space in terms of where it's going, any risks that you see coming up? I mean, this is a world that we live in right now. Is all about risk profiling, given the nature of the economics and the politics at the moment. So I'm curious if there's anything you see on the horizon from a risk profile, other than the obvious risks out there in our marketplace.
How much time have we got? There's just so many risks facing people. But I'm going to focus on a different risk than you might think. I think that there's all the traditional risks of politics and geopolitics. By the way, I just read a very interesting book by a friend of mine, Devin DeCiantis, called The Enduring Enterprise. And it really talks about risk for primarily family-owned businesses, but really all businesses. And one of the things he argues in there, which I think is really true, is especially in North America, we don't have a lot of experience with difficulty. We've had a pretty nice life for 50 to 80 years. And whereas if you're in a developing world country, you've got disaster after disaster happening all the time, and you get good at it. And I don't know how good we are dealing with serious risk. So I think that's one thing that, we're going to get hit with stuff. And it looks like things are about to change significantly in the geopolitics era. And we'll see if that happens. But the risk I want to talk about is a family risk. And I think that people spend a lot of time and money in a family office on the financial side of things, tax preparation and prenuptial agreements and direct deals and public investments. They spend very little time and money relatively on the transition of businesses. And when you're passing the baton in a relay race, the risk is the moment of passing. And that's not the running, it's the passing the baton that might get dropped. And I think that not many families spend a lot of time and money relative to the financial side of things in the preparation of the next gen to inherit, to take over leadership of businesses, and to be educated, even to be beneficiaries. And I think that is a bigger risk than people imagine. It's a big challenge for people to take over, especially if you've been living in the shadow of a founder for a long time. And I think it's important for founders to think about this, not just preparing the wealth for the heirs, but also preparing the heirs for the wealth.
I want to thank you for joining us today. It's been absolutely interesting hearing about the story of Northwood and its success, but also the growth of the family office space, which I think you'll agree is still in many ways unknown, in many ways still underappreciated and unknown. And, glad that you're raising the flag, and obviously your success says a lot about the potential and the opportunity. So thank you for telling us your story.
My pleasure. Really enjoyed it. Thanks so much.